If you want a sign that the markets are looking weak lately, perhaps take a look at the performance of Endeavour Mining following the release of their fourth quarter results on Thursday. Despite producing record free cash flow in the fourth quarter, the company was basically flat on the day following the release of earnings and had no follow-up on Friday. But there might be a reason for that. Guys, we're back from a brief hiatus during PDAC, and also I'm on family vacation here in Mexico, but I figured I'd bring you guys some mining videos because I know you guys can't get enough. All right, guys, let's dive in. Endeavour Mining in the fourth quarter recorded revenue of $941 million, which was an impressive 63% improvement on a year-over-year basis from the $579 million recorded in the fourth quarter of 2023. The revenue was off the back of 356,000 ounces of gold being sold at an average realized price of $25.90 an ounce. Earnings from mine operations improved even more dramatically, jumping 80% from $198 million last year to $357 million in Q4. Earnings from operation, meanwhile, improved from $21 million to $98. The improvement in earnings, however, was still not enough to offset income tax and deferred income tax expenses, with Endeavour posting a net loss attributable to shareholders of $119 million, or 49 cents per share in the fourth quarter, an improvement over the $160 million or 65 cents per share loss recorded in the fourth quarter of 2023. On an adjusted basis, net earnings attributable to shareholders improved from $42 million or 17 cents per share to $110 million or 45 cents per share in Q4. Adjusted EBITDA, meanwhile, improved from $292 million to $546 million, a 72% increase. In terms of cash flow, operating cash flow in Q4 improved from $167 million to $381, while free cash flow improved from negative $44 million in Q4 of 2023 to $268 million in Q4 of 2024, a new record for the company. For the full fiscal year, revenue totaled $2.7 billion, a 27% improvement from the $2.1 billion recorded in revenue in 2023. This revenue follows the sale of 1.1 million ounces of gold at an average realized price of $23.49 an ounce. Earnings from mine operations improved from $745 million to $869, while earnings from operations actually declined, falling from $443 million to $368. The decline was a result of impairments recorded during the year, attributed to both mining interests and financial assets. Net earnings attributable to shareholders for the full fiscal year declined from negative $23 million or 9 cents per share to negative $294 million or $1.20 per share. On an adjusted basis, net earnings declined slightly from $230 million or 93 cents per share to $227 million, also 93 cents per share. Adjusted EBITDA improved from $1 billion to $1.3 billion. For the full year, operating cash flow jumped 53%, moving from $619 million to $950, while free cash flow moved from negative $174 million to positive $313. Endeavour Mining closed out the year with cash and cash equivalents of $397 million, which is down from the $517 million they started the year with. Net debt, meanwhile, increased from $555 million to $732, while the net debt to the last 12 months trailing adjusted EBITDA ratio moved from 0.5 times to 0.55 times. Dividend payouts for the year, meanwhile, totaled $240 million as compared to $200 million in 2023, while spend on share buybacks fell from $66 million to $37 million. Shareholder returns totaled $251 per ounce of gold produced, which translates to a 5.9% yield based on Endeavour's math. Shareholder returns totaled $277 million versus the $210 million minimum commitment the company had guided to for 2024. All right, let's dig into the production data. Endeavour Mining in the fourth quarter produced 363,000 ounces of gold, a 29% improvement over the 280,000 ounces produced in Q4 of 2023. On an operational level, Houndé was the largest producer during the quarter, producing 109,000 ounces, followed by Idi at 84,000, Sabodala Massawa at 70,000 ounces, Lafouig at 50,000 ounces, and finally Mana at 41,000 ounces. On a year-over-year basis, the major difference here is Lafouig, which was not in operation in Q4 2023. Excluding the addition of this asset, production from continuing operations improved 8% on a year-over-year basis. For the full fiscal year, Endeavour produced 1.1 million ounces in 2024 from continuing operations, as compared to 1.07 million ounces in 2023. Production was led by Ity at 343,000 ounces, followed by Hyundai at 288,000 ounces. On a total production basis, however, production was down from 1.17 million ounces. This follows the divestment of Bungo and Wajanon midway through 2023, which contributed 33,000 and 68,000 ounces respectively to 2023's production figures. And to add to it, the company failed to hit production guidance due to substantial underperformance at Sabodala-Massawa, which was expected to produce between 360 and 400,000 ounces, but instead produced just 229,000 ounces. Guidance was hit at Hyundai and Lafouig, while Mana came up slightly short on meeting guidance. Ity, meanwhile, blew guidance out of the water, producing 343,000 ounces, far exceeding the top end of guidance of 300,000 ounces. On a costing basis, total cash costs in Q4 totaled $979 an ounce, as compared to $837 an ounce in Q4 2023, while all-in sustaining costs during the quarter hit $1,141 an ounce, which jumped up from $947 an ounce last year. For the full fiscal year, total cash costs grew from $837 to $1,058 an ounce, while all-in sustaining costs grew from $967 to $1,218 an ounce. Guidance had called for all-in sustaining costs from continuing operations to be within a range of $955 to $1,035 an ounce. In fairness, however, that guidance was based on $1,850 an ounce gold. Costing here, as a result, was heavily impacted by higher royalties paid out on each ounce, but was also higher due to production failures at Sabodala-Massawa, the latter of which cost the company $137 an ounce in all-in sustaining costs. On an adjusted basis, had gold stuck to the forecasted $1,850 an ounce figure, Sabodala-Massawa not underperformed, and power availability problems not materialized, Endeavour Mining claims that their AISC would have been about $1,003 an ounce. And if my grandmother had wheels, she'd have been a bike.
You know what I mean?
If my grandmother had wheels, she would have been a bike.
So how are things shaping up for 2025? Well, Endeavour seems to be a bit less ambitious for this year. Production guidance is now calling for between 1.1 million and 1.26 million ounces to be produced in 2025, giving us a midpoint of 1.185 million ounces, as compared to a midpoint of 1.2 million ounces last year. And let's be honest, a range of 150,000 ounces isn't exactly tight, especially when one of your mines is expected to produce 160,000 ounces at the bottom end of its guidance range. Notably, expectations for Sabodala-Massawa have been cut substantially, with the guidance midpoint falling from 380,000 ounces last year to just 265,000 this year, while Lafouig is expected to produce about double what it did in 2024. Anyways, cash costs are expected to be within a range of $950 to $1,090 an ounce, meaning Endeavour expects cash costs to fall on a year-over-year basis, while AISC is guided to be between $1,150 to $1,350 an ounce, indicating a slight rise in costs versus 2024. But Endeavour seems to be setting itself up for failure already in terms of meeting this costing guidance. The company has opted to base their guidance on $2,000 an ounce gold, despite recording an average realized gold price of $23.49 in 2024, with gold currently sitting about $2,900 an ounce and averaging close to that for all of Q1 of 2025. Why would they do this? Well, they seem to want to claim the title of being one of the lowest cost producers. And to do that, you need to guide to low costing, even if the numbers suggest it's entirely unrealistic. Gold last traded below $2,000 on February 16th, 2024. So the chances of it averaging $2,000 an ounce in 2025 are about zero. But don't let that get in the way of a good narrative to sell shareholders. In terms of capital, sustaining capital expenditures are expected to total $215 million this year, while non-sustaining capital expenditures are to come in at $215 million, as well as $10 million allocated to growth capital. Exploration capital is expected to total $75 million. All right, so let's wrap it up. Endeavour's results are a great example of why you can't just read the headlines to determine the success of a company during a given time period. Yes, record free cash flow is great from a financial perspective, but the company failed to hit guidance and continues to post net losses despite record gold prices. Not to mention their odd habit of using extremely low gold prices to construct their cost guidance. But that's mining for you, and things don't always go as predicted. To Endeavour's credit, they appear to remain focused on shareholder returns, and given we're all here to make money, that doesn't sound like such a bad thing. All right, everybody, as you can see here, I'm on family vacation. My wife's gonna kill me for doing these videos, but I know you guys, our audience, can't get enough of these, so I'm still bringing you guys the heat from Puerto Vallarta, Mexico. All right, guys, thanks for watching.